Hello everyone, welcome to Prime Business. I am Pius Kojobaka. Tax consultant Francis Timoboy has stated that implementation of the new VAT reforms will largely boost government's revenue target for the year while improving compliance through digitalization. Although some consumers say they are yet to fully benefit from the expected relief in price reductions, Mr. Timoboy said the reforms will promote fairness, enhance administrative efficiency, and strengthen voluntary tax compliance in the medium to long term. He spoke to Joy Business.
Yes, immediately we will certainly see a very big hit to government revenue. I think the government estimated about 6 billion cedis, but the counter is that we're expecting a rise in compliance. One of the challenges that we've experienced with our VAT system was the cascading effect, and therefore it hindered compliance. So now that we are now having a straight and a simplified VAT system, compliance is expected to rise, and when that rise, we'll end up widening the base for consumption tax, and therefore in the medium term, government should be able to balance off the revenue that they are losing for 2026 with the enhanced compliance. And I believe that is the best to go, because since 2018 we saw a very decreasing effect of our VAT revenue, and with this in the medium term, I believe that revenue will balance off and compliance will pick up. The challenge is that if we are unable to roll it out and force it properly for compliance to take effect, then that is where we're going to have a big challenge. Then we would have thrown money away.
The Bank of Ghana has indicated that it will not hesitate to sanction licensed firms in the remittance space for non-compliance of market obligations. More in this report. According to the Bank of Ghana, it will not hesitate to extend the necessary fines to any firm in the remittance business, as well as international money transfer operators for non-compliance of market regulations. Also, the central bank notes that if during their investigations it is established that international money transfer organizations submitted false information to secure permit, that institution's license will be withdrawn. These directives were captured in a new set of guidelines for the registration of firms that want to do business in the remittance space. The central bank argues that these new set of guidelines is aimed at promoting what it describes as securing an enabling environment for the remittance service. It went ahead to state that they will also, in line with international rules and regulations, check money laundering. The World Bank's International Debt Report 2025 has revealed that Ghana has deepened its reliance on domestic borrowing over the past decade, emerging as one of the low-income frontier economies that successfully expanded its local debt market. More in this report.
The report says public domestic debt in low-income countries has risen steadily, including in Ghana, as government seeks to reduce exposure to foreign exchange risks and meet growing financing needs. According to the World Bank, domestic debt in these countries more than doubled between 2014 and 2024, rising from 8% to 17% of gross domestic product. Nearly half of the increase occurred before the coronavirus pandemic. Ghana is identified as one of the frontier economies that successfully deepened its domestic debt market. The reports note that Ghana was able to issue local currency bonds with maturities of more than 15 years, helping to reduce refinancing pressure. The World Bank said expanding domestic debt market has allowed countries like Ghana to finance critical development needs while limiting exchange rate risks. However, the report warns that rising domestic debt also brings new risks. While most existing domestic debt is medium to long term, borrowing in 2025 shifted toward a short-term instrument. The report warns that 41% of new domestic debt issued last year was at short maturities, increasing refinancing and interest rate risks.
A new report by professional services and auditing firm Deloitte has cautioned that excessive easing of the policy rate could reverse the gains made by the government to tame inflation to the barest minimum. In its West Africa in Focus Assessing Ghana and Nigeria Economists report, Deloitte is positive that growth will remain stronger on the back of enhanced economic policy and inflation targeting. More in this report.
Despite the rate cuts, the interest rate environment remains slightly elevated and has contributed to the strengthening of the cedi and eased inflationary pressures. Meanwhile, other nominal interest rates have dropped sharply. For instance, the 364-day Treasury bill rate fell to 13.06% as of November 2025, from 30.07% a year ago. According to its assessment, while these reductions are anticipated to alleviate financing constraints and stimulate credit and economic demand, excessive easing could risk reversing the progress made in controlling inflation. On the currency front, the cedi is projected to average 13 cedis to the dollar in 2026. However, further loosening of monetary policy could reverse some of these recent gains, particularly if the demand for gold decreases due to a reduction in global uncertainty. Macroeconomic indicators are looking better and stronger in comparison to prior years due to factors including base effects, better policy coordination, and improved external position. Inflation is declining. Local exchange rates are not only stable but also strengthening, while investor sentiment and confidence are improving. But it is not all a rosy picture, as insecurity in the region remains a major concern, especially with Nigeria.
This is still Prime Business. Now, some business owners across the country are calling on government to reduce taxes further to support the growth of Ghanaian-owned businesses. Speaking to Joy Business, several business operators expressed varied views of how businesses performed last year. While some described the period as difficult, others said the year was manageable. Here's more from Sarah Esinam Atimu.
As Ghana enters a new business year, entrepreneurs across the country are making stock of how 2025 shaped their operations while setting high expectations for better economic conditions in 2026. For some businesses, the past year came with unforeseen challenges which affected their businesses negatively.
Last year business was not so good though, comparing to the new government and the dollar rates. But we are just hoping this year everything will go on successfully.
2025 wasn't that much of a bad year. Business was on and off, but at least we were able to keep up with it. What really affected the business a lot was the exchange rate. You know, we had to do with the sudden drop of the dollar. The way it fell, we had already purchased cars, paid higher duties, so we had to adjust and then drop our prices so we can keep up with the new cars that are coming.
Despite the challenges, these businesses are still hopeful for a better economic condition in 2026.
We are praying things will be better than last year. And right now, things are coming down. We are praying that everything will be fine. The markets will start going up and everything will be fine. We are praying that everything will be fine.
We are looking for a fruitful new year. The year just started, so we can't just jump to conclusion. So we are giving out our best cars. We are doing sales, hoping to get or attract the right customers. So we look forward to a prosperous year.
Concerning some of the challenges that were faced by business owners in the previous year, they have called upon the government to set regulations pertaining taxation and import duties to help scale their business up this year.
One major thing I would say has to do with the currency. If the government is able to peg the dollar at a rate that would favor us, not go down, but wherever it is, if they're able to stabilize it, it will really help us a lot. Because if the dollar keeps going up and then inflation up and down, it makes it difficult to stabilize our prices.
Our main concern is the VAT, the percentage. Maybe if the person is buying an item which costs like 5,000, the VAT percentage, the person is not willing to pay. And they also insist that we should use the VAT invoices. And also, our challenges too is the clearing. The clearing too is too much. So due to that, it makes our goods go up. People think your things are expensive and so on and so forth.
If government reduce taxes, it will help us. It will help us a lot. Yeah.
We pray that the government will not bring exorbitant taxes. It will bring some flexible taxes so that we the citizens in the business will gain at least some profit. Because right now the Chinese are taking over the business from with the citizens.
As 2026 unfolds, businesses are optimistic that with proper regulation and proper taxation, this year is going to be a fruitful year for all Ghanaian businesses. For Joy Business, Sarah Esnam Etiemo reports.
And that's it for Prime Business. I am Pius Kojobaka.